Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We're recording here on Saturday, September 17th in the afternoon. My name is Ben Maldonado. As always, I'm here with my partner, Barrie Hederachi. How are we doing, Barrie?
Doing pretty well.
Some interesting stuff in the scans this week, boy. There's not a lot to cover because, and I'll go into this a little more. Is looking like there's a big liquidation wave coming. I saw it during the week, when I tweeted a couple of times about how the board was, everything I looked at was red, bonds, stocks, commodities, different commodities, softs, grains, metals, everything. And somehow in the chart review that came through today. So I'm just going to be looking at gold and silver. I know you're going to be covering your normal big five, which is the ES, bonds, crude, gold, the dollar, and the euro, and copper. Well, we added one.
Right.
You'll be following those. And as we were talking before the show, I know you saw kind of the same thing. So it would be interesting, as we get into the charts and see. We'll start off as always with Bitcoin, which was sort of the proxy for the animal spirits as we were going up in the bubble. Coming down, it's sort of turning into a lamb here. No big huge moves. We've been stuck in the same half square for 3 months now, but the half square, the full square resistance is holding it down. The fractal that we had talked about last week is playing out again. Put these little timing things in just to see from this peak to the low was 15 days. From the previous high to the low was 31 days. Those give us a window for a potential low in Bitcoin, September 27th to October 4th. So maybe there is, maybe the liquidation wave or the panic's going to be in here somewhere and we just get a flush. Either way, until we get above this full square, in the, call it 24,500 area, it's bearish and the pressure's down. Anything to add here on the Bitcoin chart?
Well, I'll take your last couple of words. It's pressures to the downside and bearish, and it's not really bottoming action. So we can't say it's bottoming. It doesn't look like it's bottoming. So, and I don't really have any good support where the low came in. So it looks like we have at least a retest of your half square. And ideally we get down to the 10,000 number or thereabouts.
Yeah, hopefully we get into that target box because then it would be potentially interesting from the long side.
Right.
Anyway, there's Bitcoin. Let me throw it over to you. When you throw it back, we'll do the NQs, gold and silver. Boy, that one bar took out what, 4 days of price action? That one down bar?
Yeah, just about an entire week of work, right?
Yeah. Yep.
And that's how they work. All right. So if you guys are new to watch our show, please, we recommend you go back and check the last few shows so that you sort of get up to speed and catch up with the story. Otherwise, we can just pick it up and go. We left off last week looking at, we were looking at this 4140 area for some kind of resistance or at least a test of that because the trend was down. And we got that. It came about in a weird way. I mean, it was almost there, but then that news kind of pushed it all the way up to 75. But what happened was, we really didn't get a close above that. And it was just kind of a poke and reversed. But given the volatility and the news and all of that, I think we can kind of confirm that test failed. And we really couldn't get above that. And went right through the 4038, right into this 3940 area. We held for a day or so, a couple of days, and slipped right through. Picking up this week, it looks like, we had 3940, we held, we kind of bounced around a couple of days, and we came down on Thursday. Friday, we have, what is that? Is that a hammer pattern? We got this little
yeah, looks like a hammer
candle pattern there.
I mean, so how much of it do you attribute to the OPEX? And so do you discount that? How do you treat that?
I don't really follow the candles. So
I'm just talking about in terms of the fact
I would say it's the OPEX. Yes, I think that would be that's what I would think because it all came towards the end, right?
Yeah, the end of the day.
The push came almost very close to the close. I mean, last half of the day. So that be told, I think going forward next week, Well, the reason I showed the hammer was that, we don't see them every day. And when you do see one, you want to at least make a mental note and say, hey, we did have that, right? So it's just, that's how I use it. Not that I'm going to trade a hammer or a shooting star or anything like that. It'll just be just to note that we had a interesting close.
Yeah, they closed it on the highs. That is something.
Okay, so going into next week, it's going to be another one of those weeks, Ben. And we thought it was uncertain when those missiles from North Korea was flying around. Remember those?
Yes.
And it just keeps getting more interesting. All right. So next week, we're going to stick with this 3940 because it also happens to be very close to the 50% of the square coming off of the high, the square of 72. And that's around 3935, 3940. Good enough. If we're going to move, we would have to see prices settling above 3940. And if we don't, then I still think we really need to test this 38 area, which we didn't. I thought we would for sure, right? Get down here and just wrap it up one way or the other. We didn't. So two numbers we're watching is 3940 and 3825. If we get above 3940, then I would say we have more to go to the upside. When I say get above, I mean settling above on a lower time frame, or on a daily basis, to be able to make some air, have a bar that makes air above it, meaning a complete bar above that, which would mean the low would be greater than 3940. And if we don't, we bounce up here and we turn down, then I think 3825 is probably the next area to test. Given the volatility, we could get down to 38. We'll have to see. And if 38 goes, this ABCD here, this is setting up a nice Gartley. So that would set up down in 3750, 3730 area. It would give us a higher low and a Gartley pattern. So that would set up some kind of a another, well, if you call this the trend is down, then give us another counter trend rally to the upside. Now, Gartleys can have, this is just the ABCD, but Gartleys can, depending on the ratio, it can have a bigger box. So it's possible we can come down here and do a false break, or, if everything just goes to hell, just go all the way, just break through everything. Anyway, either way, 3940 is the level we're watching next week.
That's the key.
Yep. That's the key. That's the balance point for next week. And everything else can sort of be behind that. This low, geometry wise, it came in fairly well. So I'm going to watch it closely. I mean, I think it would have been nice if we had it come down to 3825 on Friday. That would have hit trend line perfectly, right? But we'll see. We'll see what happens next week. But those are the numbers to watch. Let's go on to the weekly. What we had last week, and then you and I talked about this, we had an outside reversal on a weekly basis. There's two ways to look at it. We did get under, this 38.96 level. We actually closed below that. 38.90 was the close, 96. You just look at this, it just looks like we should just probably go just at least have a little bit of follow through after that outside reversal. So right now, the weekly is very weak. That's what I have to say about it. And that Gartley pattern is here as well. Here's the ABCD, here's the XA. And so that's developing, and Gartleys can show up and put in temporary highs and lows. So it's possible we're coming down here. So those are possibilities. The main trend is still down. And
I got the only other thing I would add is on the weekly, we did hold support that I had in the 38.53 area. We bounced right off that support.
Yeah, I see.
So
it's funny, we get the hammer pattern on the daily, and then we get outside reversal on the weekly, right?
Yeah.
Just to make things easier.
Just to keep you right on the trail of where it's going.
Exactly. So we'll let's wait and see. This high came in. Remember, we talked about the cycles that came in, 180 and all of that last week. So I don't want to bring it in. Just check last week's. And also, if you guys like our work, please remember to, click the likes and maybe share and also click on the alerts and help the channel grow. That'll be very
One of the things, Barry, about mentioning about your 180 coming in, which was great. The other thing you look at when you're trying to, capture these cycles is, was there a reaction at that time? And look at the reaction. Look at the bar you got right as you got to your 180.
right
And
there.
that tells you that gives you a higher sense of confidence that, okay, that was a significant spot. I mean, there it is. Look at the bar right on the 180. Huge bar.
Yeah.
Huge bar.
And you only get those, it's not that often. So when you get them, you really have to pay attention to them.
Well, it tells you something changed, right? And that's what a cycle tells you. One thing ended, another thing started.
Yeah. And the other thing was, we always talk about the next eighth going into the square, So here's the square 90 coming off the low. It pushed exactly to the eighth, right? 1/8 of the next square, and it turned. So it did square out because it was 7/8 from the high. Okay, so there's something there, not that if we talk about all the little details of every chart, we'll be here all day. So so we kind of try to get to the get to the meat of the matter. But yeah, there was stuff there. And so we had the 180, we had 27, we had 84, low to high. So there's a lot of things. And I think, and also the ABCD comes down into 135 down from the high. So it's possible we get something cooking over there. But 39.40 is a key level to watch next week. Moving on to bonds.
The image I have here is somebody holding on to like a cliff with their fingernails.
Yeah. Well, it's a film. I mean, the pictures everywhere. These are all holding on the cliff, but now we're really holding on to the cliff, right?
Yeah. Because I mean, you're about to open up the gates of new lows. I mean, I think we poked through and made a new low, but then closed.
We made a new low, and it doesn't look like a false break because the close was pathetic, and we couldn't even get above 132.
Right.
Before we talked about the 132, if we slip through there, we're probably going to make new lows. Actually, we talked about it here at 137, and I didn't think these lows were going to hold, and I don't think that's any kind of a news. So yeah, I think we're probably going to go lower and at least get to complete the square. So for now, we're on bonds, we're on the short side. 132 is sort of the reversal point, balance point we're watching. And moving on to the weekly bonds, picture is not any better. We took out the half square. Really, I mean, look at these downtrends, right? So just straight down. And we didn't even get it. Normally, when you come into a half square, at least you'd get a little bit of a bounce. Nothing slipped right through. So this is very weak. And we could get down to 144 level. So it looks like there's a lot more to go.
And Barry, an interesting thing with bonds making new lows and stocks and bonds having been positively correlated all year, meaning when bonds go down, stocks go down. When bonds go up, stocks are going up. It could be a leading indicator of where the equities are heading.
Yes. We'll have to watch that. And so far, it definitely looks like it, right? And yeah, so weekly is pointing down, and there's really nothing. I don't have any cycles calling for even a time cycle. So it looks like the trend is going to continue in that direction. And this 132 is really the only number we're watching. Moving on to crude.
We're getting close.
We are getting close. And look how well it's kind of formatting.
It's perfect, man. It's perfect.
It's a beautiful square circle.
But the danger, if we don't escape that square, man, we could have a whoosh down.
Yeah, so that's
if we don't escape the circle, you know what I mean?
Yeah, and coming off of a geometry like this, bouncing off of this channel, the lower channel, you would expect at least a 50% bounce into the middle of the channel, which we couldn't even muster up more than not even a quarter, right? So so it looks weak. It's 83 is really sort of the support number we were watching. And you can see, we got in there one day, ran back up, just trying to hold above the 90 for now. But like I said, until we get out of this circle, the pressure is to the downside. And since we put the circle up 2 weeks ago, it's the pressures to the downside, and it's probably going to continue to the downside till we clear the circle. In the meantime, if 83 goes again the second time, I don't think this is going to hold, and it's going to be sort of a bloodbath, I think, going into at least to test the 73 area. We'll see how that works. But for now, it's weak, and 83 is a level we're watching. If it can somehow hold 83 next week, all right, we bought some more time. We'll see what happens. But for now, 83 is a level to watch, and 73 and a half is sort of the big support. And you can see why. We have all this history right around that level anyway. All right, let's look at the weekly. Weekly, we also had this other channel that held last week, and this week we did the inside bar. And a downtrend is not very bullish. So
no.
Really have to you got to really watch it here and watch the levels. It looks weak, and like I said, if we take out this low, we're probably going to slip right into at least a half square on a weekly basis, which is right around 73, 74. So that's what we're watching. Now, if 83 is held somehow next week, and we kind of skate through this and consolidate longer, and we can hold above 90, it's possible that looks like then we're going to get into a period of consolidation at this level, without any direction. So that's a possibility. But let's watch this for now. Anything you want to add to this, or?
Just I have weekly and monthly resistance in the 89 area, so that's key for me. It's got to get above 89.
Yeah, and I have 91, so that's like the area, right? All right, moving on to gold. Well, I'm about to turn bearish, and that's probably when the low is going to come in.
Yeah, I was wondering if we didn't see that clean out move or at least the start of that clean out move, because we took out all those stops. Yeah. Right, going back to 2020, March and April of 2020.
Yeah, and the weekly really shows that well. And to catch up on where we left off last week, there were a couple of numbers here. 1730 was the level we had to clear, and clearly couldn't do that. 1676 is the support that we had, and it looks like we went down just to do a little exploration trip, but not a big, not a huge recovery off of that. Clearly, the trend is down. I have some channel lines drawn in, and what that means is till we take out this channel, there's a lot of downward pressure. There's no question about it. The 1676 finally, this has been here for months, and this is the level really we have to watch now. Coming down, 1814 was the level. You can see we went up and really couldn't do anything about that. Next level after that was support was 1730, came around, couldn't do it, slipped through, couldn't get above. So now so this is really weak price action. Now we're at 1676, and I'll tell you what, if this Friday's low goes, I think there's more to go. And the reason I say that is in the weekly chart. So let's take a look at that. So this is the weekly, and we do look at monthlies, and Ben does a really nice monthly show every once a month, and we look at the monthly gold, and it's there. And you can see the weekly, the reason we've been bullish is because we've been holding above that 180-degree square up here, and we've been consolidating, right? So it was a good pattern, positive pattern. And now what's happening is, we were consolidating okay. I mean, all through 21, we were making higher lows, higher highs, went up into the February high, and ever since that we've been making lower lows and lower highs, and that's all fine. That can all happen within consolidation. But now, we had a couple of red flags here, right? The 1760. Well, first one was we should have held above 1881. Remember that back in early part of the year. And you can see we tried that for several weeks, broke through, and you can see right there, final test, 3 weeks, almost a month worth of testing, and really couldn't do it. And that was a leg down. And that came down to the 1670 level, couldn't, that was support, rallied back up, couldn't quite get to 1881, couldn't quite hold above this 1767 right there, slip through, which is, these, so every time you slip in through, these are signs of weakness. So 1670 was the level that was the only, you can see there are no numbers below that. That's the last
Right.
level I have.
Right.
And like I said, we did complete this ABCD right there, coming off the high ABCD. We did get to that, but the recovery was kind of anemic. So I'm sort of questioning that, being, waiting to see what would happen on a shorter time frame. But for now, I think the price action is fairly weak. Unless we just rock it out next week, looks like we're probably going to go lower, especially if we take out Friday's low, right? Because otherwise this would be a false break and we should just giddy up and run. And it doesn't look like from the price action so far that we're going to do that. The key thing to watch next week would be the weekly low, 1662. Let's call it 1662. If we take that out, maybe there's some relief around 1620. Otherwise, it's almost unthinkable, because we could slip into 15 and we can go back to the daily and look where the support levels are. But I think gold is going to be in a little bit of trouble because of this wedge sort of giving out. So these kind of patterns of, the positive side is it can be very, very bullish if we can hold above certain levels. And here, these lows are not forming just anywhere in thin air. It's actually holding right above very critical support off of a 180-degree line. And that's why this is important. In fact, that, if we take it out, it's probably going to be very bearish, a weekly basis, weekly. So
Key
we'll have
spot.
to wait.
Yep.
Pardon me?
Key spot.
It's definitely a key spot. We've had this for a while, and all around key spot to watch for gold. All right. Then we have copper. Copper, we did 60 low to low. It looks like we've been doing, we had a 60 low to low here, 60 low to low. So it's possible that we rally off of it, but you can see, last week, we poked above, really couldn't do it. And now we're between the last high and the low, and, we're kind of consolidating. Nothing exciting yet. So it's possible we continue to consolidate. But so far, not much. I don't think there's anything actionable here for any kind of a big trade. So,
and it's interesting too, Barry, because what copper's doing, a lot of these commodities are doing, which is why I say, there's could be one more push down in a deflationary wave, from off that original high.
Yep, I agree. And same thing here. Here's a weekly copper. You can see, we have this fork drawn up, and
that's a great square. Look at how it's capturing highs and lows. Really good.
Very good. So here's the 90. So the key thing is, if we're consolidating above the 90, again, that's going to be bullish, especially when the trend is up, coming off the lows in 2020. So we'll wait and see. Last week was kind of a, last 3 weeks we've been kind of range bound, so not much to talk about there. Dollar, of course, is bullish. 107 was our number. As long as we're above that, it's sort of a buy the dips kind of scenario. Trend lines are holding. Everything looks good so far. The next target is around 112. Yeah, so this ABCD comes into that. So it's possible we consolidate. Currencies consolidate a lot, but as long as we're above 107, dollar looks strong.
And you made air too with your daily bar there when it's coming down to support. Couldn't even get to the 144.
And last week we got below the square, rallied right back up. So I don't know how long this kind of steepness can last, but it looks good so far.
It'll last until it breaks something.
That's right. And long as it's lasting, what they say, right? If it ain't broken, don't fix it.
That's right.
Trade the trend. What we do have is we have a 90 weeks coming up in a couple of weeks. That would be off the low in 2021. And that's going to be important. So 90 weeks by 180, that would be a hell of a target to make. So let's keep that in mind. And when these kind of targets show up, it means the push is really going to be hard going up into that. So
What week is that? That 90? Is it like a first week of October?
yeah,
Yep.
first week of October.
Mhm.
And give it, one or plus or minus. So figure first week, second week, right?
Mhm.
112 is right in there. So see how that
That's
goes.
a great target.
Yeah, it looks good. And the opposite of that for the euro looks weak, and it might consolidate here for a little while longer, but overall it's just we're still trending down. And we did have a sort of a minor square at the low couple of weeks ago. Again, kind of a week, and they made kind of a bounce off of that, came all the way back down. So it looks like we're trapped in this area for a while, and really there's no breathing room. I mean, even if you draw trend lines, we're squarely down. I don't really have any levels other than just I'll work some up later, but when something's going straight down, really not much to do other than 102 can be the upper square that it has to take out, and the lower boundary was 98.8, so that's a bracket, and the market is weak within that. Yeah, that's well, we got to look at the weekly. Let's take a look at the weekly euro. So weekly euro, what I see here is if you use the square of 90, which has worked really well, the half square is around 967.967. So eventually we ought to get down there because we didn't really bounce off the 1/3 of the square. So it just looks weak. And so it looks like we have more to go. And after that, depending on the price action, there might be more. But that square in the dollar that we talked about, so it's here in the euro as well. And so that's coming up, and that would square out right there. So 112 would correspond to that price. And that seems like an easy trade if it sets up like that. That's all I got. Let me put it back to you.
Excellent. Good review.
And, we'll finish up the coverage with the metals, right? You're doing the metals today.
No, just gold and silver. That's it.
All right. All right, Ben, tell us about the NASDAQ. What's going on here?
Yeah. So weakness is what's going on here.
Mhm.
Last week we were talking about how the key level was this half square around 12,500. Early in the week, I think this was Monday, we gapped up, pushed up, everything looked good. We were heading above it, heading up to the full square, and then whammo, CPI hit. Sliced right through the half square. Was on Friday we were pushing below the full square, and then the last hour of the day, they pushed up with the OPEX close. So we did close above the full square, which is some consolidation or some consolation for the bulls. That's in, call it 11,890 is key right now. So this week, that's the key price. If we can get above it, sit on top of it, stay on top of it, we can bounce up and head back and try and challenge that at 12,500 level. If we get stuck below and lose that level, then you're talking about the next half square down, which is 11,280. So it's looking weak. We did take out that low, a previous low from the first week of September. We made another lower high on the rebound. I mean, it's weak, and odds favor we're probably not going to hold here, on this full square. From a timing standpoint, high to low here was 146 days. The secondary high to the low was 56. So I put a 56 in, a 90 just for 90 days. And then if we did the 147, the key one to look at is, I think, is this 56, which would take us out to November 2nd. The 90 takes us to Christmas, which I have some cycle stuff around there too. So the 90 is interesting as well. I don't know. To me, Barrie, it looks weak. They did push up at the end of the day to get above the full square. On a weekly basis, we did hold support that was in the 11,800 area, 11,780. So there was some support down here. But I think we're overall weak and rolling over. What's your take here on NASDAQ?
Pretty much the same take. I think we have to hold that full square, and the pattern similar to the S&P we just looked at. I would give it. I would say Nasdaq has to clear that 1/8 level you have.
Yeah, the
The
1/8
upside-
is.
Well, clear to the upside for it to turn, but if we get under the full square, it's probably gonna go lower. More to go.
Yeah, your eighth up is about 12,050.
Right. So I would treat that like, my 39.40 on the ES. So it's similar, right?
Yeah, yep.
Yeah.
But definitely, it looks to be rolling over now. For the commodities, as I alluded to at the beginning of the show in the intro, the commodity charts look by and large. Few of them are in just sideways consolidations, like sugar and cocoa. Those are the ones that have been going sideways. All the other ones look to me, with the exception of the grains, which I'll talk about, look to me like they got another push down coming. We had big moves lower in them. They've bounced, and now they're kind of rolling over again. So there's one more push. And again, that sort of corroborates what I saw this week in several different days. Like, I think 3 days out of the 5 days, at one point in the day, everything I was looking at was red. Everything I was following, the commodities were red, bonds were red, stocks were red. The only thing green was the VIX. And it was interesting because I said, well, where's that money going? And it wasn't like it was flying into any other asset that I'm looking at. It was the dollar or cash.
Right.
And that's sort of the signature of, at least the way I look at it and the way I view it. It's big money, getting out before something, raising cash before something, because it's not like they were taking money out of the grains and moving it into the softs or putting it into the metals from, the S&P. It was leaving the markets and heading to cash. And the charts, the review I did on the charts this weekend, in preparation for the show and for this week, really showed that there is the potential for one more strong push down almost across the board in the commodities. On the grains, wheat and corn are in a bullish position. They've made lows, they've pushed up, they've pulled back, and there's a potential, if they hit certain levels, if they pass certain levels, where they could take another leg up. My concern is, are they going to be able to swim upstream if we have a rush of water come down the river and heading down river? And you may see that. So if you want to look at the levels, go to our shared website, the shared Google Doc we have. We'll post the link to it. All the levels are there, and you can sort of see where the important levels are for each market. So the only ones that I want to cover are gold and silver. And the reason being, Barrie talked a lot about gold. Here's the gold chart. The reason I want you to look at gold charts, gold's, been in a downtrend, as he said, since, the February, March high. We made a new low on Friday, pushed up and tried to close near the high. This low came in on a lot of support. It exceeded, multiple support levels over the last couple of years, and we reversed. So there's a possibility. We don't have evidence yet, so it's not, hey, jump in and buy gold because the low's in. There's a possibility the low is in. What we need to see, the first step we need to see, is we need to see it take out this half square and sit on top of it. And that's, call it, 1696. If we can do that, we got higher confidence that this low may be good. If we get stuck under it, we're heading down lower. We're gonna get another push down. Maybe it's a part of this next deflationary wave or push that we're seeing as potential in the commodities, that gold gets pushed down one more time. The full square support right now is around 1600, 1605. I'm putting this up again, not saying, hey, there's a bullish setup, we're going to get a pop, we're going to see it run this week, just to show you that a key level here would be the 1600, taking that out. I'm sorry, 1696, taking that out. And of course, this downtrend line we got to take out as well. I know you covered gold. Anything else to add, talking about the scenarios that we're looking at here with the commodities, Barrie?
Yeah, well, while there's no long side setup, and we haven't been short gold. Maybe we should have looked in hindsight,
Right,
but
right.
but it was sitting on top of all that support. You really can't, you have to pick and choose your fights. But here it's a critical moment, right? It's a critical price, a critical time, and if we slip, yeah, we'll go lower, but that'll be the washout that we've been looking for. And if it turns here, then we know it'll settle above our key levels and start to move higher. So we'll have to watch it.
Absolutely. So that's the story with gold. Let's take a look at silver. Silver's interesting in that we actually have recaptured a level after making this semi false break low. I mean, a false break, usually you want to see one bar pop up really hard. This came down, made a new low, and then next couple of days we got right back into the pattern. But look at what it's done. It made a little high, pulled back, and it pulled back right on top of the full square.
Mm-hmm.
That's a bullish signature, right? And that's what we're hoping we see with gold. Gold is in this spot where it just made the bar that took out the previous lows and support that we had longer term. Silver's a little further along, and now it's pulled back and held on top of that full square. And look at Friday's bar, right? It tested that low, closed on a high.
Yeah.
So it's pretty clear what we need to see from silver to say, hey, this low is good. We need to see these highs taken out.
It looks a little bit like the copper chart. Like it wants to go, It's got that trend line on top. So we just have to see if we can clear that at this point.
Absolutely. And if not, if it gets caught up in the potential deflationary wave and that one more push lower in the commodities we're seeing, you'll know it if it can't hold this full square. If it can't hold the full square and we get stuck under there, chances are we're going down to minimally to the half square. But I wanted to show gold as, sort of how we approach the corner, what we look at. You don't just, grab the falling knife. You isolate a spot where it's potential, and then you see, do the technicals going forward support that thesis? Here, we're a little further along. We got another good piece of evidence here, which is it held the full square. Now let's see if it can take out that high and give us a higher high and, start making headway to the upside. But that's all I've got in terms of commodity charts. Again, because of the patterns we're seeing are saying the odds favor another push down. And, Barrie was saying, oh, we should have shorted gold. The reason that I didn't short gold, and I kind of convinced him not to, maybe wrongly, but if we look at the monthlies on across the board on the commodities, they're still bullish. There's bullish charts. And for me, and it's something I learned from you, Barrie, really, is you always got to look at that bigger picture, right? You can't just trade based off of a daily. You got to look, where are you in the bigger picture? And in the bigger picture on these commodities, we're still in bull markets. We believe that the odds favor there's another major leg coming up in them. And so shorting them, you either have to be a really nimble trader. I call Barrie the ninja a lot because he really is nimble, but you got to be a nimble trader, and you got to be concerned that, okay, the bigger picture is up. You could see the turn, one day move. It could take out lows and then rocket higher, because that's how these things move. So personally, I always try to be trading in the direction of the bigger picture of a specific market. And Barrie, why don't you comment on that? Because you do a great job going, back and forth between very short time frames and very long time frames.
Well, I just wanted to say I agree with what you're saying about the long-term monthly. If you look at the quarterly, monthly, yearly charts, which we do, and they're all very bullish. So this is sort of a correction within that bigger bull trend, and it's really not worth trading the short side when the pressure is to the upside, especially in a huge breakout cycle like this. So yeah, about the gold, I was just joking, because as long as we were above that key level, right, it is bullish, and you have to pick a side. So all the commodities are bullish at this point, according to charts, not even looking at anything else that's going on in the world, just looking at the charts. if you look at the weeklies, we're getting close to finishing up these corrections in, cotton or soybeans, all of these things. So and before the show, we were talking how, they're probably all going to just finish up and then one by one start to move back up again. And so if in the big picture, the next few years, that's where we want to be, playing the bigger cycle. The ninja stuff is okay for day trading or catching these little moves, but the big money is in the big moves. So,
and how do you balance that? I think it's a good topic, because a lot of people struggle with, time frame and looking at one time frame and then trying to trade another. How do you balance that?
I think it's a struggle.
Yeah.
To balance it. Yeah, because if you're doing one, at least some people are, people are capable of sort of multitasking. At least for me, it's, I get into systems, right? Systematic ways of doing things. So I got to do it this way, A, B, C, D, so that rinse and repeat. So if I'm day trading, it's easy because I know what I'm doing there. But when I start to mix things up, it's really easy to miss an entry somewhere else because you're busy trading something short term. So what I do is I tend to assign a certain part of the day to look at the long-term trades, and then when I'm done with that, then come back to day trading. And so I've assigned day trading used to be like first slot, and the second slot was looking at these longer term stuff. So now that we have to, because the bigger plays and volatility is up and everything's moving, now the longer term work gets done first, and then spare time goes to day trading because there's more money to be made on the bigger moves that are setting up. So I'm kind of balancing it like that, but assigning like what's important gets done first. And then if I have time, I'll be looking at those other things. Or I only focus when we post a fuse on the ES, for example, right? When we have a fuse line coming, I try to see if there's a trade developing around that, or just wait for key levels. In the meantime, just really stay focused on the daily charts and the weeklies and these bigger moves.
No question about it. I think that's helpful. I know it's something that for years I struggled with, and having people hear that might help them if they're having the same issues with.
But it's also it's also a personality thing. Some personalities, so you have to kind of know what your skill set is and your strengths and weaknesses. And if you don't like the pressure, stress of day trading, then it's better to be focused on longer term trading. But also, there's so many variables in trading. It's so difficult to sort of put everybody in a hole, right? Because it's account size, margins, where you're trading from, where you live,
personality,
hours, everything comes into play at the end, and your risk temperament, how much are you willing to risk? So all of these things come in at the end. I think everybody has to kind of look around and find what works for them. And
which is a perfect reason why don't take a trade just because somebody else takes a trade. It has to fit what you do and who you are.
Absolutely.
Because even if it could even work out well, and it could be a miserable experience for you because you're nervous or you can't sleep or your stomach's churning. You gotta find what fits you. Right? You take the information and then you use it in a manner that fits you, your risk tolerance, your personality, how you feel about the markets. Because if you don't, invariably it's going to move in a way that causes you to do the wrong thing because you're uncomfortable.
Right. And you're better off just always leaning on your work, or even if you supplement your work with other services or whatnot, you have to lean on that at the end of the day and trade that. That's the only way you can grow as a trader, is to really lean on your own work. And because that way you're also learning, right? You're continuing to learn about systems and how you're doing and your habits. And we're just talking about entries, that's like 20% of the ball game. The rest is taking profits and exiting.
Oh, God.
Because my son's learning to trade, and I was telling him the other day, listen, entry is just like the easiest thing because anybody can get in. Any minute of the day, you just hit buy and you're in. So entry is really not the point. Yeah, it's good to know, have your setups.
I mean, every week you and I talk about, oh my God, we could have maximized this exit, or we could have done a little better on that exit. It's a never ending process, man.
It's never ending. And that's where the growth is, right? By because that's the final end of all of this work, is how much profits are you making on a trade. And the only thing that determines that is not the entry, it's the exit. So you want to make the entry, all this research minimal, and have a reliable, high probability sort of a methodology to get into these things. But after that, that's just the 20%. The 80 is really about managing what you got. Are you going to get out too early? Did you move your stops up too soon? All of this other stuff, which not nobody, I would say 80% of what material out there is not focused on that, right?
Sure.
And it's probably less than 20 that actually focus on that part of the equation, which is really the most important one.
It's what leads to the most profitability, that's for sure.
Yeah. So
anyway, it was a little bit of an educational part of the broadcast this week. If you appreciate that, let us know in the comments. We'll try and do more of that. The bottom line is we are at a very important week, given what the charts are saying. Are we going to get that whoosh? Are we going to get this deflationary whoosh for a week or two into late September, early October? We'll see. The charts are saying that to me. I'm very interested to see what's going to happen and how it plays this week. Anything specifically you're focusing on this week, Barry?
Well, I always focus on the big five and the commodities, and this week especially all of them, because
right.
It seems like they're also in critical areas. Like all the grains could be correcting, so we're watching those, metals, everything.
Mm-hmm. It's like it's one big trade, isn't it? Right now,
it feels like it, because of the dollar, right? Because of the dollar, everything's.
Yep. That's what it seems to be. So let's see if that continues. Listen, correlations are great. They break when you least expect it, or they start when you least expect it. But right now, the dollar definitely is the key here. So let's see what happens. Have a great week, everybody. Barry, have a great week. Good show, and we'll talk soon.
Thanks, Ben. Good job. Talk to you later.
Bye-bye.